Happy Wednesday, and thank you very much for attending another session of RM Smart Investing. It's May 2023. I'm so pleased to have you. As in today's session, we're mixing things. I thought about we could do something about scalping, which, believe it or not, it was a big thing in late 1990s, and it was something that in these prop trading offices, people were using Microsoft of the world, and in those days that was big, IBM. So we'll discuss that. So basically, in our session today, we're going to review actually what is scalping anyway. What underlying assets can you use? Is it just the futures on S&P, or can you do in other instruments, and would that work? And what time frame will work the best when you're doing scalping? What about your entry strategies, and how about exit strategies? And then at the end, I will put it all together. We look at some charts, and then I will have some final thoughts to just review and to make sure you're prepared for using scalping. So what is scalping? Well, basically, scalping is a trading style that mainly specializes in profiting of a small price changes and making a fast profit of these reselling. So in day trading, scalping is a term for strategy to prioritize making high volume of small profits. So basically what it is like a large quantity of whether it's the shares of stock or contracts, and you just look for small movement. So you're in and out. And basically, as I mentioned, I had friends that, again, in late 1990s, before the internet bubble happened, in those heydays, they would buy like 300,000 shares of IBM in these prop, again, trading places, and they would, make 25 cents. They would make 50 cents. Hardly anyone would stay for $1. So it was only, you buy 100,000 shares, make 25 cents, which is pretty good money. And it was usually the props money. So that was the case. And then, a lot of people who do day trading in the, let's say, futures market, and also in Forex, that could be, again, a small movement with a large commitment in a sense. So that's basically what scalping is. Now, it becomes almost like gambling, and it becomes exciting. And that's the problem with the scalping, because either you have to do it frequently, you're in and out, and then you get really hooked on it, and you just want to do it, 10, 15 times, 10, 15 trades a day. At the end, you will see that it's better to be patient, have a quality trade. Then you can have multiple contracts, and you should just have, again, a good setup. It's all about having the edge, and then in and out and done. And don't put yourself under the pressure. Again, make sure your scalping doesn't become like swing trading. Don't excuse yourself. Make sure you have your setups and your exits, your stop losses all in place. So let's talk about what underlying assets could we use? Well, for me, I've used mainly on S&P futures, and also on the Dow, because the Dow has, the $5, again, as far as a point, it makes sense. So you can have multiple contracts. NASDAQ sometimes becomes difficult. They move so fast that it can become really, it becomes a noise sometimes, so it stops you out. So I don't recommend that. Russell, similar idea. So I would say my favorite two futures on the financials, especially in equities, would be ES and YM. ES, obviously, because of the liquidity, and YM is because of the smaller number as far as the per point. So, but again, as I mentioned, individual stocks, you can do the same thing. Sometimes you see these small stocks which have really high volume, and there's a big movement, well, you can go long or short and basically take advantage of that. Or you can play big stocks such as Amazon or Google, mega caps that they can be a good underlying, but of course you have to have the capital for that. So that's the thing. So sometimes it's better to have lower price shares, knowing that, again, there's a lot of liquidity. Also, gold is a very attractive one. You could use it, and that's something that I would suggest. And also the 10-year notes, more so than the 30-year bonds, but they're similar. But the 10-year notes are also the good ones. Crude oil, and it works a lot with the Forex, especially something like Aussie US dollar, which could be very trending. That becomes very attractive. So euros, US, Japanese yen, or Aussie dollar. I've also used to use this actually on a overnight sessions, especially in Asian markets. It's had a pretty good success with the grains futures, mainly in soybeans and corn. Not so much with wheat, but the corn and soybeans are pretty good also if you're involved with the ags. But also you can use other things. But these are, as you will see, the liquidity is very important. So make sure the spread is very small, because you don't want to lose on the ask and bid side of things. So you want to make sure there is a very small spread. So as far as my setups, what time frame do I like to use? Now, for me, if you're familiar again with my trading style, the 60 minutes plays a big role. It is my anchor chart. I like to look at, again, the pivot points, the support resistance, moving averages, Ichimoku. So all of those, I like to have back of my mind, knowing that some of the important points. But that feeds off, gives me some idea, some of the places that they could create a resistance, or they could create a support. But the main ones for your setup as far as the trading entries, I would definitely recommend watch your 5 minutes that starts, but you will watch 1 minute, and I will share my 233 ticks as well. Now, the reason I use 233 ticks, which you can use 512, the 233 is, again, Fibonacci number, and basically it has worked well for me, which is in a very, very short term. The good thing is, overnight, sometimes it's very slow. So when you're like in a 1 minute or 5 minute, 10 minute, things are really slow. 233 ticks doesn't care about the time, as long as their 233 trades are done, as far as the movement of the ticks. That can offer much quicker and much shorter time frame. So those are the things I would recommend. Again, eyes should be on 5 minutes. That should be your main go-to. But again, you can use your 1 minute confirmation and use the 1 minute with the eyes on your 5 minutes. I will show you a little trick how to combine those. And then, of course, you want to pay attention to daily pivots as well. So just have that back of your thoughts that, there are some important points that the daily, but again, my anchor would be 60 minutes. So are there different styles or different things we can use for entry strategies? Should we go in when there's a trending market? Can we use that as our entry? How about the channels when there is no really direction? It becomes choppy. There is a really you can see a good setup, in a sense of you have the 2 or 3 or 4 points on the support area. You have 3 or 4 points on the resistance area. That becomes your channel, your rectangle, and you could use that as a setup. But a lot of times, for instance, in my situation, I like to use like the reversals on the extremes, using like linear regression channels. You can use your trend lines, the support and resistance, and also we can use like a moving averages. One thing I emphasize, especially when you're doing the ticks, is that use the candlesticks. That's especially on 1 minute and 5 minute, and we will discuss that. That gives you more confirmation as far as your entry point. And that's, again, you want to master, there's quite a few candlesticks, but the few that I use, I think that will give me a good entry as far as, especially when there's reversals and support and resistance. So we know about entry. How about what is the goal? What is our exit strategy? Majority of time when we talk about scalping, it is not really depending on technical, unless you want to use, you're very close to, let's say, again, we use a candlestick, and let's say the candlestick is gives us another indication of exit. Maybe there are some pivot points, like there's a resistance if you're long. But the main thing with scalping, and this is a little difficult for people, because for traders to stick with their rules, is they become flexible. They start going to the, I got a moving average, or I got to use this. The scalping is all, the bottom line is about the dollar, or the amount of profits that you want. So basically, it's in a sense of absolute numbers. And generally, it's a 1 to 2 risk reward. What that means is, let's say you're doing ES, you can do 1 point for 2 points of reward. So your risk will be 1 point. And again, that's why you should be pretty good at your setups. Make sure you're patient, you find the right ones, rather than, again, just keeping, going in and out. Especially there's still, when you do futures, there's commissions you have to be considered. And then also, as far as the spread goes. So one of the things is, again, 1 to 2, 1 to 3, you could, I've done that before, but 1, 2 is the most normal way. Some people use 1 to 1, and they do in and out more frequently. But again, you use the point system. So for instance, if it is for the Dow, for instance, now you go to 10 Dow points to 20, 10 is the stop loss, 20 is your reward. And you can do the multiply of that. So that's, let's say you do 10 contracts, you do 15 contracts. So you do have a specific number in mind. And that will be the way I would use it, scalping, rather than using the technical side of things. So with that all in mind, it's very simple, again, in a sense that you are going with a specific profit target. You want to make, let's say, $100 per trade per contract. So if you have 10, that's $1,000, knowing that it's $500 loss. Or according to your, again, you have to remember, we recommend 1% of your capital, up to 2% the most. So you don't want to risk more than that. So if you have a $10,000 account, then maybe you should do micro, and basically you can afford to lose $100, for instance. If you have 100,000, you're okay up to $1,000, and that's something that you have to take into consideration. So what I want to do, I like to go a few charts that it actually has happened. And we had the FOMC today. So these charts are right before the FOMC, and right, one of them is when the FOMC happened. So let's start with our candlestick that I would recommend to pay attention to. And usually these are the like on the reversals. So you already have set up. You do have, again, support, resistance, moving averages. You have LRC, for instance. Even sometimes you could use Bollinger Bands as your support and resistance. And what you want to do is, like, this is almost like a 3 white soldiers. I want you to pay attention to engulfing bearish, or you could have engulfing bullish. So you could be on the bottom, red, 3 black crows going down. And let's say we had now a green candle engulfing this candle, that's a reversal. So what happens in the scalping, the engulfing candles give you a good edge of knowing that there is a good entry point with more conviction. Another one you could use is we call them bullish kicker pattern, and this is a reversal again. And you can be conservative and go at the high of the third candle, or sometimes we can look at similar to these are like the tweezers, but this is we can use the high of the low candle or low of the high candle. So for instance, now this is a tweezer, but let's say this didn't exist or this didn't exist. So what happened, this was the lowest candle, and then now if we break above the high of this, and let's see, even there was a tick, and there was a wick and there was a tail. If you break above that, now we enter in this candle. So that gives you more conviction to enter. So those are reversals, or again, we have this big engulfing, which would engulf actually 3 candles, and we can actually go in low of this. So candles are very important. And your goal is, again, if you have the profit targets of 2 points, generally things happen quickly. So let me start with my anchor. So let's say you're reviewing, and I have my 60 minutes first. I'm using Ichimoku number 1. I like to see where are the support and resistances, where there are trending and standard lines. Where do you stand? Are we in a more of a bullish, or are we in a more of a bearish? So it kind of gives me a better edge as far as knowing that which position will be more profitable for me. And in this situation, for instance, we have this red candle in the 60 minutes going against the resistance here, the lower edge of the cloud. So perhaps you have this support. So I have these numbers. Maybe right around here, maybe I would consider shorting rather than going long. So that's one. What I also like to use in the 60 minutes, the moving averages, and my moving averages are, as you can see, I use the 8. And again, you will see this like more of, again, Fibonacci numbers, 8 and 21. And I use exponential moving average for the 8 and 21. And as far as the 50. Anytime I use longer time period, let's say 100, 200, I rather use simple. So, but here we go. Again, you can see on a 50 bar moving average on the 60 minutes, we have this resistance. So I make a note of that. Now, this is overnight, so it's a continuous contract. So obviously you see this choppiness. Would you do anything here? Not really. But again, keep that in mind. So if you have something that you want to go long, just be aware of that. So let's start. So we got our anchor, but again, your main chart will be your 5 minutes. So you want to have an idea about 5 minutes. So I mentioned about some of the rules. One of them was, let's say, if there is any trend. Now, for finding out a trend, you can be visual, but you can also use ADX, for instance. So I have here, you can see how, visually, you can see that the trend is visibly, you can see to the downside. So we've had these convergence of the moving averages. Now they're separating, and basically we have, again, 821 and 50. And basically what you can see is this is like really waterfall. So what you could do, again, you don't, you already have the conclusion, but let's say you're right here. So one of the ways you could do when there is strong trend like this moving average becomes your resistance. So what you could do every time we kiss this, this is a good time to basically take a position, and you could have shorted it, you could have shorted it here. So that's a trending part of the, again, a trade. Then you have this choppiness. You see the convergence, and of course, MACD also tells you there is no trade, and this is overnight, and basically there's no decision to be made. And of course, we have the FOMC day today, and then all of a sudden, you can see now we found this trade again, a trending trade right here. MACD confirms it. So you could have just done a quick, again, the idea is that you want to have a high quality, high probability trade, and you're going to be in and out. So basically we close below the 3 moving averages, and the candles, you see this engulfing candle right here. So that gives you confidence. Now, of course, you can ask, again, this is in hindsight, you say, oh, you know what, I could have stayed in this and made money. Yes, you could have. But again, our goal is getting to the scalping side. And the same thing here, what you can see, the trend has changed. But one of the things you could do is, in this situation, is the high of the low candle, low bar. So this is the low. We broke above that, and then this continues. So you put the stop sign, your stop loss at 1 point. And as I mentioned, if you want to use technical, then you will put the low of this low candle as a technical if you want to use it in a technical tools as far as your stops. So that might be a 2 point. So just have to make that decision. But regardless of that, this is a trending, this is a trend, this is a trend, but this is a chop, and that's where you don't want to be in. The other way you could use is, I use and this is the 5-minute channel again, 5-minute chart. You use the linear regression channel. So one of the ways you could do now, this, you can see the trend is up, but we are not in extremes. But one of the ways you could do, again, using the candlesticks, generally what happens is you can either take the moving averages the first time when it touches, or you can have the retracement part with the, again, the price coming back the second time, and that gives you a better entry point, something like this. And some of the, again, oscillators are not used a lot. You could use it for trend, MACD perhaps. RSI, generally, it's not, I don't pay too much attention for the overbought and oversold. What I like to do, if I'm using the trend, for instance, if this is the midline and I think this trend will continue, I would use RSI to be on the right side of the trade, as long as it's above the 50, for instance. So 50 is my confirmation. So rather than thinking in this overbought side, I would look at, okay, if I'm going to go long, I'd rather be when RSI is above 50. So let's bring it to another idea, is do not attempt to do any type of a scalping when there's some economic news coming up. So for instance, this is right where the FOMC is happening. And look at this. This is the bar, the first 5-minute bar, and the FOMC, that's 11 o'clock West Coast time or Pacific time. And this is the choppiness. It will get you out in both ways. Either you're long or short. It could again, it could affect you, and it will stop you out and then goes to your direction. So I would avoid, generally, it could be 5:30 a.m. West Coast time, some of the news comes up, or 7 a.m., 7:30. We watch the European side. Sometimes, again, it's like if you're trading midnight, make sure you are aware of these economic news. So the idea is you don't want noise and you don't want big movements, because, again, this is such a short term. That the 2 ticks is nothing, or 2 points is nothing. So avoid the big economic news. So you can see how things can move. And again, you can see the trend was, although we did have this trend, the ADX was kind of low. We started having a nice trend here, but you didn't really have any type of a confirmation to go in. So you probably, I wouldn't have gone, I usually use my moving averages basically to go in, and that's something that I would take into account. So I use the 5 minutes and I bring it down to 1 minute. So I'm really looking again for something that gives me that edge. And one of the edges is I'm a big believer in the moving averages, especially when there's consolidation and then the opening. So for instance, again, you can see this bar, this candle, and MACD is confirming it. We had it, I like the big bars, and we talked about engulfing, but this is the lows have been made, and there's another consolidation here. So what I like to do is basically I look for the expansion. We call it bow tie, for instance, expansion of moving averages to get in. Now, one thing I've put down here, you can see here, as I mentioned, I want to pay attention to 5 minutes. And in this situation, as you can see, I'm still using the 821 and 820 actually, and 50 bar on the 1 minute. But you know, a lot of traders and actually investors, they really for intermediate term and short term, they like the 20 or 21 bar moving average. So what I've done is you can, because that 20 bar plays a big role in your 5 minutes, we can translate that 20 bar moving average on a 5 minutes to multiply it by 5 times 1 minute. You can use 100 bar moving average, and that you can see becomes a very good place as far as for reversals, for instance, or the support. So if we are in downtrend, you can see, again, I just did this before the FOMC, you can see that the markets respect that, and the moving averages become a good place for your support or your resistance. So that's another thing you can pay attention. And the other thing is, I just mentioned, once we break below like a moving average, we'd like to come back and kiss it. And that could be another way of entry point. Another way I mentioned about let's say, I look at goals 1 minute, I look at the volume, ignore this one. This was a settlement time at 10:30 a.m. Pacific Coast time, but you can see again, this is FOMC move, so ignore that. But on LRC on 1 minute, you see this is a 2 standard deviation right there. You see this engulfing, and it's we are 2 standard deviations. So this could have been a good entry for gold. Again, your goal is to maybe make $100, for instance, which is 1 point in gold. And then we have another one, and you can see we got the second time that was, again, got rejected, and you could have made another trade if you wanted to. But that's something that, again, you can use the 1 minute with the combination of the LRC. So this is more of a reversal tool. Now, personally, I used to do this a lot, but lately I just do it, once in a while. I pay attention to 233 tick, and my 233 tick has the 20, 50, and the 200 bar moving average. Now, as I mentioned, the ticks are they're not time sensitive, so especially in the fast moving, they can give you a good indication. But the problem is, again, you have to be patient. You cannot just keep going in and out because, again, that will not be for your good for your financial health. So in this situation, you see this is my 200 bar moving average, and it has presented a good support. And you can see every time we've bounced, once we break it, then it becomes my resistance, and you could have either shorted here or you could have waited here, and now we have double moving average, and you could have shorted there if you wanted to. I don't pay too much. There are in my charts, but again, with the RSI, you can use it. Let's say this was like oversold, and now we have this, that will be from a reversal. I'm paying attention more about the resistance. And at that time, you could see we kind of tried to go above the 50. We could not. So we broke below the 50. So that confirmed this could be a good short. Stochastics, again, 233 ticks, they're could be very choppy. So, we went overbought. So that could be used. I'm very visual with 233 tick. I just watch and I look at the moving averages mainly. So I hope that was helpful. Another thing you could use is the channel. So now this is a 10-year note. And as you know, one of our things are the first thing, 420 to 520 are high and low of that time zone. And we look at it as a channel or a rectangle. And you can either use it as a kind of a trading zone, in a sense that it could be a support, or you could have a breakout. So another thing in the scalping, you can watch for the breakout either up or down. This is like a box. You could even put an order either or. If it goes above, then you go long, one tick above. If you go one tick below, you go short. So you could have used this breakout, or you could have used this reversal here. Again, you probably would have gotten in somewhere around here after breaking above this low bar, and then have your two ticks, or again, two, depending on, in this case, it's the bonds, depends on how much money you want to make per contract. Is it $100? It's for the 10 for 30-year bond and 10-year, when you look at the pure one tick, it's like $31.25. So is it you want to use 5 ticks? It all depends what your goal is. But this is a way of using the channels. So with that in mind, again, it's not very complicated. It's all about you approaching your trading as a really with the knowing that what is your risk, and being patient about that, and not be looking at it as like a slot machine. I'm like in and out. No. But it is, because especially using a high number of contracts, you have to be selective, in my opinion. So let me give you some final notes that I think is important in my 7 rules. Make sure you have a good live feed. So it's obvious, but when it comes to these short-term trading, especially when you're doing ticks, you don't want to have delays. I mean, you want to make sure you're right there, because you're going to be in and out. So, and that's important. Make sure your internet connection is reliable and dependable, and it's fast, because again, you cannot have any kind of a lapse in there. Your computer should be also in a tip-top shape. Make sure you have a high RAM, and make sure there's no, again, locks or anything that slows you down. Again, this is something that I've done things that I've been in. I think the shortest time I've been in a trade has been 6 seconds. So it could be in it for 6 seconds, 15 seconds, 1 minute. So make sure that the computer is in a good shape. Now, when you do swing trading or you're doing options, you can afford, because the time could be on your side. With scalping, it's not. So, and also have a backup plan. Just in case something goes wrong, make sure you have a direct broker. Some people use level 2 for scalping. You could do that if you like, level 3. I just want to go with the simplicity. It's something that, again, especially visually using the charts. So, and of course, like anything else, make sure it's liquid markets, because the spread obviously plays a huge role, especially if you're only taking a very small profit. You're taking two points, for instance, in an ES, or 20 points. So make sure the spread is very low, and that's what the liquidity plays a huge role. So underlying whatever you're using, make sure it is liquid. And I keep mentioning the patience. Please be selective what you're doing as far as choosing your entry, and make sure you're disciplined. And as I mentioned before, the 7th thing is be aware of your upcoming economic news, because that can obviously make a huge moves, anticipation of those huge moves. So I used to have a rule when we used to be in, well, it was with pit trades, all that. I would not be in 5 minutes prior and 5 minutes after. That was my rule as far as those days. Or if you had the USDA report, used to be 11:15, the closing, for instance, on the agricultures, I would make sure the things go really crazy the last 5 minutes, up to 1 minute before the closing of, let's say, ags, I would be out of it. So be aware of these important trigger points. So with that in mind, I really appreciate it. Again, it was, I want to make it short and sweet. So I will stop the recording and open up for any type of questions that you have. Thank you.